comparison of real estate to stocks, what they have done. Now, this is just going to be a return comparison. Obviously, you can't live in a stock, right? You can, you you need a roof over your head, and obviously, home ownership is the dream of every American. But should they be? Can they afford it with these days with the higher interest rates? Can somebody with a college degree now, graduating with a 50, 60,000, 80,000, let's say, salary a year, can they afford to own their homes? I think home ownership is becoming more of a dream, right, these days, because we know what has happened to interest rates. Interest rates have gone up. Mortgages basically have doubled on the same house from a couple of years ago. Affordability index is extremely low. And if you want to rent it, and you know what happens there, rents have gone through the roof as well. So to me, obviously, homeownership is something every person dreams of, but you also have to make sure, can you afford it? Can you afford to keep it? Because a lot of people buy homes, buy their houses, and they don't calculate most of the other expenses, right? Like, for example, at my house, you have to, water and power bills have gone through the roof over the last couple of years. They have doubled. And you have a gardener, you have a poolman. I have a pool, I have a gardener. But these are important things that you have to figure out. Also, you also have to figure out maintenance costs, right? I mean, I'm sure when somebody buys a house, they have an inspection done, but you need to pay attention to these things. There are constant costs, right? Home ownership is not without a cost, not just like you buy it and you forget it. You have to factor all these things in, and you have to look at your income, right? Do you have a stable job? Are you between jobs? You have to make sure. But so 36% of Americans say real estate is the best long-term investment. Now, 36% is not a huge number. Now this, when they say real estate, it's not just home ownership, personal home ownership, your primary house, but investing in multi-units, collecting some rent. Basically, like Monopoly, we just buy as many houses as we can and we collect rent when they land. So, are the returns on investment keeping pace with inflation that we're experiencing? Well, my mentors told me that when inflation is around, which it is, to the tune of 7%, actually, when the government says 3%, I talked about inflation last week. That's not true. They're pumping in so much money into the economy, or they did, and for the past, I don't know how many years now, since 2008 actually, that your money is basically becoming worthless. That's why what's happening is to Bitcoin, right? And that's why asset prices have gone up. So to hedge inflation, one of the best hedges is real estate, right? Because hopefully it will keep pace. But is it, right? If you buy a house, you have a mortgage to pay, you rent it out, you can control the rent, obviously, but is it keeping pace with inflation? We're going to see what the returns are. So 36% Americans say real estate is the best long-term investment. Financial pros say they may be wrong. Well, everybody has a bone to pick here, right? I mean, I like real estate, obviously, because it's a tangible asset. It's an asset that, the prices have gone up over long periods of time, but it may not be what you guys think it is. So for years, they have done polls, right? And people in the US still think real estate is the best long-term investment. Well, here's a chart on the left screenshot. Real estate ranks at 36%. Stocks through mutual funds, not individual stocks, because we know what can happen to individual stocks, are second place, 22%. Gold is at 18%. Savings accounts, which we know what happened when the interest rate went to zero for 12, 14 years, that's probably not a good idea. You're earning zero and inflation is eating your money by, I don't know, 6, 7, 8% a year. Bonds, stable income, obviously, but then they do fluctuate quite a bit. And then cryptocurrencies, 3%. So real estate is in the lead, according to 36% of Americans. Are they right? Are they wrong as an investment? I think they are wrong, but we're going to talk about it in a minute. For many Americans, investing in real estate is likely means buying a primary residence, obviously, where we live. Like I said, you can now live in a stock or a mutual fund. And we know if you do have you don't have one of those hocus pocus loans. You have a 30-year fixed mortgage that your payment is fixed. And we know on a 30-year, the first 18 to 19 years, you're basically only paying interest. Very little is gone into your principal. And then the last 11, the principal gets, paid off. But now you're dealing with two things in real estate, right? You're dealing with price appreciation and you're dealing controlling the rent if you do buy an investment property. So to me, then there was a study done from 1990 to 2024. That's like 34 years. The S&P Case-Shiller National Home Price Index, which measures residential real estate value, has risen by 308%, right? So in other words, home prices have quadrupled over the last 3 decades. I mean, obviously, that's a long time. But at the same time, if you had invested in the S&P 500 over the same exact period, the 34 years, the S&P 500 with its ups and downs, and we know real estate had its ups and downs. I mean, in 2008, we know what happened to home prices when people were losing their homes to foreclosures because they bought homes that they could not afford to be in. And with hocus pocus loans, right? I'm guilty of doing some of those loans when I had my mortgage company. But so over the same period, same 34 years, the S&P 500 measure of which is the benchmark is up by 1,325%. So 4x, 4 times. So maybe the American public is wrong. Is it? We'll see. So here's the chart. As you guys can see, the dark blue line or purple line is the S&P 500 since 1990. Yes, it has its ups and downs, and it kind of correlates with the ups and downs. Home prices actually kind of correlate with the ups and downs in the stock market as well, because it's a major asset, right? And personally speaking, I bought my house in 2002. Okay, I've been in the same house for the last 22 years because I love the area, in a suburb of LA. My kids have been born in this house. They are being raised in this house. One is going to college. One is going to high school now. So I'll give you the idea about my house price. I purchased my house in 2002 for $800,000. Okay. I had a obviously mortgage on it, but I put down close to 25%. And so when the 2000, before the 2008 financial crisis hit, I had an offer on the same house for $1.3 million, right? My wife and I said, no, we're going to stay here. We're going to retire here. We like the school districts, amazing school, charter schools. I go, there's no reason to gamble with the house. Well, I could have sold the house like a stock at 1.3, take $500,000 profit, and then gamble, right? Well, you don't do that with primary residence. But should you have done that with your investment property? Most likely, because a lot of people have lost their investment properties because they got into it with those, zero down loans or, adjustable loans, right? I mean, we know what people did. And Tiger Meg, we're going to have to talk about that. While stocks have been volatile, more volatile than real estate. Then from 1.3 million, when the financial crisis hit, my house went down in value to all the way down to $650,000. Think about it, 50%. That's pretty hard, right? But today, again, in the next 16 years, I could easily sell my house today for 1.5 to 1.6 million, right? And I already have paid 22 years worth of stuff, and I'm paying tons of principal now. So I have built massive amount of equity. So as you guys can see, over long periods of time, real estate is obviously a valuable asset. So that's why you cannot put everything in real estate. You cannot put everything in stocks. But the point of this segment was, stocks have outperformed real estate over 4-1, which is a massive, massive, massive outperformance. And to me, yes, you do need a primary residence, but please make sure when you do buy something, a house, that you can afford to live in it for a long period of time. And, it's not an asset that you can easily trade. It's not like a stock that you can buy and sell online. You have to deal with mortgages and banks and real estate agents and escrow accounts and all that stuff, right? Yeah, I mean, to me, definitely primary residence is an important topic. and you should have a house. But unfortunately, we know the affordability index is not there. People cannot afford to buy homes, especially their first home. This was not my first house, but unfortunately, if you're just starting life as a couple, let's say in your late 20s, early 30s, you both have full careers. We know what has happened to house prices, and the affordability is not there as much as I would like it to be.